there, what's up, ladies and gentlemen? Jordan Dove here, and today is Friday, May 20th, 2022. And fun fact for you, on this day, today, in 1873, blue jeans were patented. You know, blue jeans, a nice denim, those were patented today. Anyways, guess what? Look, I know it. I know there's so many people out there, so many who think a housing crash is coming. We're seeing the fake stock market extremely volatile. The VIX is up at 30.83, which is up over 85% since January 1st of this year. And if you are not familiar with the VIX is a CBOE volatility index and signals the level of fear or stress in the stock market, which uses the S&P 500 index as a proxy for the broad market, hence why it is widely known as the fear index. The higher the VIX, the greater the level of fear and uncertainty in the market, with levels above 30 indicating tremendous uncertainty. Today, the VIX is above that 30 marker, so tremendous uncertainty in the markets. Anyways, back to real estate, and at the end of the video, I think I came up with the solution to solve the inventory shortage. I think this would really work, so watch till the end of the video. Let me know what you think about that solution. I don't know if it can be done, but it's definitely a solution to one of the problems. But anyways, today what we're going to talk about is the truth about the foreclosures in the United States right now. And there are several markers we look at. And as you know, during the last kablooey in 2008, there were so many foreclosures on the market, mostly due to predatory lending, and then those mortgages were sold as mortgage-backed securities to anyone who would buy them. Then the funds were bet against with insurance, which had payouts of more money than existed in the entire world at that time. So when the housing market fell, everything collapsed and many homeowners defaulted on their loans. So there was a ton of foreclosures on the market. A lot of people are saying because of this forbearance, there's going to be a lot of foreclosures on the market, but I want to dig into this a little bit deeper, okay? So as many are speculating a crash, we're going to look at the markers, and one of the markers we're going to look at today is the foreclosure market. And I'm sure some of you have been seeing recent stories about the volume of foreclosures. They're increasing. You got to look at the context. Context is important. So during the pandemic, many homeowners, many homeowners were able to pause their mortgage payments using the forbearance program. Everyone heard about this. The goal was to help homeowners financially during the uncertainty created by the health crisis, COVID-19, right? So when the forbearance program began, many experts were concerned, it would result in a wave of foreclosures coming on the market as there was after the housing crash in 2008. So we're going to take a look at the number of foreclosures we're seeing today. And guess what? It is nothing like last time. I'm going to make a few points. And the first point is that there are fewer homeowners in trouble. Today's data shows that most homeowners are exiting their forbearance plan either fully caught up on payments or with a plan from the bank that restructured their loan in a way allowing them to start making payments again. And I'm going to show you a chart graph here on the screen that depicts those findings from the Mortgage Bankers Association, okay? And this chart shows cumulative forbearance exits from the period of June 1st, 2020 through March 31st, 2022. As you can see, 37% were paid in full, 44.6% were workouts or repayment plans, 18.4% were still in trouble, with 1.3% of those in trouble turning into short sales, deeds in lieu, or repayment plans. 17.1% of those have no loss mitigation plan. Okay, so look at that chart. What do you think? Let me know in the comments. Here's the second point. Most homeowners have enough equity to sell their homes. For those who are exiting the forbearance program without a plan in place, many of those will have enough equity to sell their homes instead of facing foreclosure. And that's due to the rapidly rising home prices over the past 2 years. and the average homeowner has gained records amounts of equity in their home. Record amounts. I have a quote from Marina Walsh, the CMB, Vice President of Industry Analysis at the MBA, says, given the nation's limited housing inventory and the variety of home retention and foreclosure alternatives on the table across various loan types, borrowers have more choices today to either stay in their home or sell without resorting to a foreclosure. Here's the third point. There have been fewer foreclosures over the last 2 years. And one of the seldom reported benefits of the forbearance program was that it gave homeowners facing difficulties an extra 2 years to get their finances in order and work out a plan with their lender. That helped prevent the foreclosures that normally would have come to the market had the new forbearance program not been available. Even as people leave the forbearance program, there's still fewer foreclosures happening today than before the pandemic. And that means while there are more foreclosures right now compared to last year, but that's also when foreclosures were paused. They were paused last year. The number is still well below what the housing market has seen in a more typical year like 2017 through 2019, and I'm going to put that graphic on the screen for you. As you can see by this visual, there have been 413,480 fewer foreclosures in the last 2 years, with 290,260 foreclosures being the average between 2017 and 2019. And I'm going to make a fourth point here, and that is that the market can easily, very easily right now, absorb these listings and absorb new listings. So when the foreclosures in 2008 hit the market, they added to the oversupply of houses that were already there. We already had an oversupply of homes, well over the 6-month norm, right? And it's exactly the opposite today. The latest existing home sales report from the National Association of Realtors reveals, and I quote, the total housing inventory at the end of March totaled 950,000 units, up 11.8% from February and down 9.5% from 1 year ago, which was 1.05 million. Unsold inventory across the United States sits at a 2.0 month supply at the present sales pace, up from 1.7 months in February and down from 2.1 months in March 2021. End quote. A balanced market would have approximately a 6-month supply of inventory, and at 2 months, today's housing market is severely understocked. Even if 1 million homes, enter the market, they still would not be enough inventory to meet the current buyer demand in our market currently. The bottom line is, if you see headlines about increasing number of foreclosures today, remember that the context is important. While it's true, and it is true, that the number of foreclosures is higher now than it was last year, foreclosures are still well below pre-pandemic years, and you got to remember foreclosures were halted for much of last year. So, and I know interest rates are higher. They're sitting at 5.34% national average today, and that means that buyers have less purchasing power. However, there is still so much demand with the lack of inventory that homes in the median price range, I believe, will still stay at these elevated levels. Now, I do think, because I'm seeing it in my market, I do think that we will see more and more price reductions on homes listed in the above median range. And in my market, that is the $600,000 plus homes. As I know many cash investors, we've talked about it, the private equity, okay, the Wall Street hedge funds, the foreign investors, they're still purchasing homes in cash, turning them into rentals, but they're looking to purchase under that 550 threshold. Okay, so the higher stuff, I think we might see a correction here before that median price, but because there's so much demand and less inventory, people are still gobbling up those homes. I am seeing a little bit more success with first-time home buyers because we're not seeing 20, 30 offers on those median priced homes, but we still are seeing multiple offers very, very quickly. And I didn't want to leave you guys hanging. All right. So I don't know if it's possible, but I do have a solution to the inventory shortages that, I think would create a huge influx of inventory. And the solution to solve the inventory shortage is to allow property owners to sell their property tax free. If you own property that's owner occupied and you're married, up to $500,000 in realized gains, that's tax free. And if you're single, up to $250,000 in realized gains are tax free. I'm not an accountant, I'm not an attorney, not legal advice, not accounting advice. Go check with your CPA. But however, if you have a non-owner occupied property, you will pay capital gains taxes on that. So if you have an investment rental, a vacation home, if it's an investment property, you will pay capital gains taxes on that unless you defer it through a 1031 exchange and roll those gains into another or more investment properties with it. So let's say, for example, the federal government would say for the next 12 months, we would allow sellers to sell their property without paying any capital gains taxes. You would absolutely, definitively see an influx of listings, and I think that would help balance out the market pretty quickly. Is it possible? Probably not. The federal government doesn't want to do anything good for the middle class, but then again, that is a solution. I think it would work, and it's a solution to one of the biggest problems we have in real estate. So anyways, thanks for watching, guys. I hope you're doing great. Hope everyone's well. It's nice to be here. Nice to see you guys. Leave a comment, like and share the video. Subscribe to the channel if you're not. I would greatly appreciate it. If there's anything you want me to talk about, let me know. You guys have a great weekend. I will talk to you all soon. Bye-bye now.